All right, so get ready because we're diving deep into today's market landscape. We've got this financial news podcast to unpack, and our goal here is to pull out the most important insights, whether you're an investor or in business or just like to, keep up with things.
Yeah, sounds good to me. Let's see what they've got for us.
Okay, perfect. So first, let's just get a quick snapshot of how the market did yesterday, but I don't want to just throw numbers at you. Let's break it down. So the S&P 500, which track 500 of the largest U.S. companies, well, it dipped a bit, which, kind of suggests maybe a little hesitation. It's kind of like the pulse of the market, the S&P.
Yeah, exactly. These indices, they really act like a gauge of investor confidence. So a dip, it doesn't necessarily mean we need to panic, but it does show us, that there's some uncertainty out there.
For sure. And then there's the Nasdaq, which is really heavy on tech companies. And that actually took a bigger tumble. And that's interesting because, well, tech has been a driving force in the market for years now. Even Bitcoin and Ethereum, those digital, the darlings of the crypto world, saw a little decline. It's almost like the whole market just took a breather yesterday.
Yeah. I like that, a collective deep breath, like everyone's just holding their breath, waiting to see what's going to happen next. And speaking of waiting, let's move over to the energy sector. Oil prices, well, they've been all over the place this month, but it looks like they're kind of finding their footing as October comes to an end.
Okay, so what's driving that positive trend? Well, this podcast, it highlighted strong U.S. fuel demand, and that's a key factor, which is really interesting because globally, things are a bit shaky, but here in the U.S., demand's strong. So that makes you wonder, right? What's behind that?
Yeah, it definitely makes you think, especially considering, as you said, all the global uncertainty, right? I mean, this demand here could be a sign that our economy is strong or, maybe it's just temporary. We'll have to wait and see how things play out in the next few weeks.
Yeah, for sure. Okay, so let's zoom in now on the tech sector. Two of the Magnificent Seven, Apple and Amazon, they're getting a lot of attention. Now, I know Magnificent Seven sounds like maybe a superhero team or something, but in the financial world, it refers to those 7 biggest, most influential tech companies.
Right.
And these two, well, they're expected to deliver some positive earnings surprises.
Yeah, and these aren't just any tech companies. I mean, Apple is really pushing the boundaries with AI, artificial intelligence, and Amazon, well, their dominance in cloud computing seems unstoppable. So their upcoming earnings, those reports could really shake things up, not just in tech, but beyond.
Right. It's like a tech showdown, isn't it? Two giants kind of battling for, well, supremacy. And what's so fascinating is that their success isn't just about, selling gadgets or delivering packages. They're becoming so integrated into our lives, from work to entertainment and everything in between. So I'm curious, based on what you've seen, who do you think is positioned for greater success, in the long run?
Ooh, that's a tough one. They're both incredibly innovative and have very loyal customers. I think it all comes down to their ability to adapt to how quickly the world's changing. Whoever can anticipate the next big thing and stay ahead of the curve, well, they're going to come out on top. But for now, I'm really eager to see how those earnings play out.
Me too. Absolutely. Okay, but before we get, completely lost in the world of tech, let's shift gears and talk about jobs. The latest U.S. Challenger job cuts report.
It's kind of a mixed bag.
Yeah, that's right. The good news is layoffs actually went down in October compared to September, so maybe some of those economic fears are starting to ease a little bit.
Right. Okay. But, and there's always a but, right?
Right.
Job cuts are still a lot higher compared to this time last year. So companies are being cautious. They're walking this tightrope, between the economic pressures and the need to keep their talent. It's like they're trying to figure out, do we batten down the hatches or do we, keep investing in our people? Yeah, that's a great point. This data really reflects that uncertainty we were just talking about, with the markets. Companies are trying to figure out what's next, but the economic outlook, well, it's still a bit murky. It's definitely something to watch closely over the next few months.
Absolutely. Okay, so are you ready for some company spotlights? These are always interesting because they give us a peek into how businesses are handling this, well, complex market.
Yeah, absolutely. I always enjoy hearing what's happening on the ground. Let's hear it.
Okay, so first up, Shell. They managed to kind of defy the global refining slump. Their profits only took a small hit, smaller than expected, which shows that they're not just sitting back and letting the market, dictate their fate.
It sounds like they're making some strategic moves, maybe diversifying or investing in renewables or even just streamlining their operations. It seems like this proactive approach is working for them.
Yeah, and it's a good lesson for all of us, right? Even when things are tough, there's always room to innovate and adapt.
Exactly. And speaking of companies doing well, ConocoPhillips is another one. Their share price is up, and their earnings are better than expected. They seem to be benefiting from those stabilizing oil prices we talked about.
They are. They're definitely riding high right now. But it's not all smooth sailing for everyone. Uber, for instance, the ride-hailing giant, well, they beat earnings expectations, which sounds good.
Right.
But their gross bookings, and this is the total value of, rides and deliveries booked on their platform, those missed the mark, which is raising some concerns.
Yeah, gross bookings are a really important metric for companies like Uber because it reflects the overall demand for their services.
Hmm.
So missing the mark on that, it suggests that growth may be slowing down, and that could be a problem for their future.
It makes you wonder, right? Are they facing tougher competition? Or is it, maybe consumers are starting to tighten their belts? It reminds us that even the most successful companies aren't invincible.
Yeah, they definitely aren't. And then there's Smith& Nephew, a medical tech company. They've actually issued a warning about sales declining in China, which is a major market for them.
This is really interesting because it just shows how interconnected the global economy is.
Right.
What happens in China doesn't stay in China. It can impact companies all over the world. And it's not just Smith& Nephew. The podcast mentioned other healthcare companies feeling the pressure in China as well.
Right. It's a reminder that we can't just focus on our little corner of the world. Everything's connected, and changes in one place can have ripple effects everywhere.
Okay, so with all these company stories in mind, let's zoom out a bit and look at some broader sector-specific trends because, well, like you said, everything's connected.
Yeah, let's connect those dots.
Okay, great. So first up, technology. We already talked about Apple and Amazon, but their performance could set the tone for the whole sector.
Yeah.
They're the companies that everyone watches, and how well they do, or, well, if they struggle, it can have a big impact, not just on other tech companies, but investors and even consumer confidence.
Yeah, their influence is undeniable. They're not just shaping the technology landscape, they're influencing how we live and work and interact with the world. It's really like watching the future unfold, in real time.
It is. It is. Okay, next, energy. Oil prices, they seem to be stabilizing, which is good news for companies like Shell and ConocoPhillips, and probably for all of us at the gas pump, too. But we can't forget about those geopolitical risks that are always looming. Something could happen that throws things off balance again.
Right. Those risks are always there in the background. A conflict or a natural disaster, even just political instability in a key oil-producing region, any of those could send shockwaves through the energy sector.
Yeah, it's like a game of chess, right?
Right.
You always have to be thinking a few steps ahead and anticipating what might happen. And speaking of anticipating what might happen, let's talk about something a little closer to home. The presidential election.
Oh, yeah, the election. That's always a hot topic, especially when it comes to the market.
It is. And this podcast mentioned a really fascinating prediction model, one that links how the Dow performs to the incumbent party's chances of winning. Now, I know we're not supposed to get political here, and we won't.
Right.
But this model is just too interesting to ignore.
I agree. It's not about taking sides. It's about understanding those potential connections between, what's happening in the market and what happens in politics. So tell me more. How does this model work?
Well, according to this model, if the Dow is up for the year, the incumbent party has a 70% chance of winning.
Wow.
Which is pretty impressive.
Yeah.
But here's the kicker. The model has a 99% confidence rating.
99%. Wow. That's incredibly high. It really makes you wonder if there's something to this connection between how the market performs and how people feel about, who's in charge.
It really does. And whatever your political views are, it's a reminder that things that seem separate, like the market and politics, can actually be deeply connected. The market doesn't exist in a vacuum, and neither does politics.
Absolutely. Absolutely. And speaking of connections, we can't wrap up this sector analysis without talking about global markets. China's economic performance. Well, that's a key factor to watch, especially after those warnings we heard from companies like Smith& Nephew.
Right. And any slowdown there could have effects across a lot of sectors, not just healthcare. It's like a domino effect, Changes in one major economy can trigger chain reactions around the world.
Yeah, and in today's globalized world, those chain reactions happen faster and with greater intensity than ever before.
That's for sure. Okay, so we've covered a lot of ground in this first part of our deep dive. We've seen some signs of stabilization in the energy market, the potential of these tech giants like Apple and Amazon. We looked at the mixed picture with jobs and the need to watch China closely. Lots to think about.
It is a dynamic and constantly changing landscape, so understanding these trends is so important. If you want to make good decisions, whether it's investing in the market or running a business or just managing your own finances.
Absolutely. So before we jump into the second part of our deep dive, where we're going to explore some of the underlying factors driving all these trends, let me leave you with a thought-provoking question. We talked about that election prediction model and how the Dow is currently performing. What implications do you think this has for the upcoming election?
Ooh, that's a great question to think about. It encourages our listeners to connect the dots and really think critically about, everything we've talked about so far.
Exactly. And remember, this isn't about picking sides or pushing an agenda. This is about understanding how things connect, how market trends and political outcomes can be related. So, food for thought.
Yeah, definitely. Welcome back to our deep dive. Before we go any further, I think we should unpack those mixed signals we saw in the market overview. Remember how the S&P 500 and the Dow, they dipped a little, but the Nasdaq, which is all about tech, took a bigger hit.
Right. It was like the market couldn't decide if it wanted to be optimistic or cautious. So what's the reason for all this back and forth? Is it just normal market stuff, or is there something deeper going on?
Well, I think if you look a little closer, you'll see there are a few things kind of pulling the market in opposite directions. On the one hand, you've got good news, like oil prices stabilizing, and those tech giants we talked about, Apple and Amazon, they could have strong earnings. That's making some investors feel bullish, like things are going to keep going up.
Right. But on the other side, there are still worries about inflation and interest rates going up and, those geopolitical risks that always seem to be simmering in the background.
Exactly. And those are definitely keeping some investors cautious. It's like they're a little afraid to jump in, worried about what might happen.
So it's this kind of push and pull between optimism and uncertainty that's creating this mixed bag performance. And it's not just the whole market. We see it in specific sectors too, like energy, for instance.
Right. We were just talking about how oil prices seem to be stabilizing, and those companies, Shell and ConocoPhillips, they're doing well. But still, there's that underlying concern about, well, those geopolitical risks. What if there's a sudden disruption in the oil supply, for example?
Oh, that would be a big deal. Prices would go through the roof and the whole sector would be in trouble.
Exactly. And that's a possibility that's always in the back of investors' minds, which adds to that cautious feeling even when things seem good.
It's like trying to have a picnic on the side of a volcano, right? Beautiful scenery, but you can't quite relax.
That's a great analogy. And it brings up another point. We've been talking about market forces and all this economic data, but we can't forget about the human element. Psychology plays a huge role in how the market moves.
You mean like fear and greed, those classic human motivators.
Exactly. Fear can lead to panic selling, driving prices down even further. And greed, well, that can lead to bubbles where prices get totally out of whack with reality. Remember the dot-com bubble back in the late 90s?
Oh, how could I forget? It seemed like everyone was going to get rich quick on internet stocks. The party was never going to end until it did. And a lot of people lost a lot of money.
It's a perfect example of how emotions can really cloud our judgment, especially when it comes to investing.
So how do we, as investors, or even just people trying to understand the market, how do we deal with all these mixed signals and emotional ups and downs? It feels like a minefield out there.
It can definitely feel that way, but there are a few things you can do. First of all, understand your own biases. Are you naturally optimistic, always expecting the best? Or are you more pessimistic, focusing on the potential downsides?
I think I'm more of an optimist, always looking for that silver lining.
Well, that's good to know because it means you might need to remind yourself to consider the risks as well. Being aware of our natural tendencies can help us make better, more rational decisions.
It's like check yourself before you wreck yourself, but with your money, right?
Exactly. And another important strategy is diversification. Don't put all your eggs in one basket. Spreading your investments across different types of assets like stocks, bonds, real estate, that can help reduce your risk.
So if one part of your portfolio takes a hit, the other parts can help soften the blow. That's classic financial advice, but always good to be reminded of it.
It is. It's easy to get excited about a particular stock or sector, but diversification is key to being a smart investor. And speaking of things that can get us excited, remember that election prediction model we talked about? The one that links how the Dow does to the incumbent party winning?
Oh, yeah. It really made me think about how market performance and how people feel about, who's in office, how those things could be connected. But do you think people actually decide who to vote for based on how well the stock market is doing?
Well, that's an interesting question. The model suggests that a strong stock market could actually help the incumbent party, almost like voters see it as a sign that the economy's doing well.
But is it really that simple? I mean, there's so many other things that influence how people vote, like social issues, political beliefs, even just the candidates themselves.
Of course. Of course, we can't oversimplify things. The economy is just one piece of the puzzle. But it's still interesting to think about how it might influence politics, even if it's just one factor among many.
It's another reminder that things that seem separate, like the market and politics, can actually be pretty connected.
Exactly. So switching gears back to those companies we were talking about, I thought it was really interesting to see how Shell and ConocoPhillips, those big energy companies, are adapting to a changing world. They're facing challenges, the refining slump and all those geopolitical risks, but they're still finding ways to be profitable.
It's a testament to their resilience, wouldn't you say? They're not just sitting around waiting for things to get better. They're actively changing their strategies to deal with this complex situation.
Absolutely. And their success really highlights the importance of diversification, even within a specific sector like energy. Both of those companies have operations in different parts of the world, and they're involved in different parts of the energy market. This helps them spread out the risk and take advantage of opportunities wherever they pop up.
It's like having a diversified portfolio, but on a company level.
Exactly. Now, what about Uber? Remember how they beat their earnings expectations but missed on those gross bookings?
Right, that was a little strange. What do you make of that?
Well, I think it reminds us that even giant tech companies aren't immune to challenges. The competition is always changing, and companies need to be flexible and innovative to stay ahead.
It's like the Red Queen in Alice in Wonderland, you know? You have to keep running just to stay in the same place, and if you want to get ahead, you have to run twice as fast.
That's a great way to put it. And Uber, well, they're facing more and more competition from other ride-hailing companies, and the delivery market is getting crowded too. They need to find ways to stand out and keep attracting both riders and drivers.
It's a constant battle for, well, for customers, and only the companies that can adapt are going to make it.
That's right. And then there's Smith and Nephew facing those declining sales in China. Their situation really highlights how tricky it can be to operate in a globalized world.
Yeah, it's a reminder that things like geopolitical tensions and economic slowdowns, even cultural differences, those can all impact a company's bottom line. What happens in one part of the world can have ripple effects everywhere.
Absolutely. And companies need to be aware of those risks and have plans in place. They can't just assume that what worked before is going to keep working.
It's all about managing risk and adapting to change.
Exactly. The companies that can do that well are the ones that will succeed in the long run.
Okay, so we've unpacked a lot from this financial news podcast so far. We talked about investor sentiment, the connections between the market and politics, how important it is for companies to be able to adapt in a globalized world. But there's still more to uncover.
I know, right? I'm really curious to see what other insights we can get from this podcast. What's next on our agenda?
Well, in the final part of our deep dive, we're going to shift our focus to the future. We're going to look at some emerging trends that are shaping the future of the market and what they might mean for investors, businesses, and really the world as a whole.
Sounds fascinating. I'm ready to dive into those future trends.
All right, welcome back to the final part of our deep dive into this financial news podcast. We've covered a lot of ground, haven't we? Investor sentiment, those geopolitical risks, how different companies are doing, even that fascinating connection between the market and politics.
Yeah, it's been a lot of information, but I think we've managed to pull out some really key insights.
I think so too. But, before we wrap up, I think it's important to zoom out and look at the bigger picture. What are those underlying forces that are shaping the future of the market? The kind of trends that are going to have an impact for years to come.
Yeah, that's a great point. It's easy to get caught up in the day-to-day news and lose sight of those long-term trends, the things that are really driving change behind the scenes.
Exactly. And if we want to make smart decisions, about our investments, our careers, or even just navigating this crazy world, we need to understand those bigger forces.
Absolutely. And I think one of the most significant trends we're seeing is this unstoppable rise of technology, right? I mean, it's changing almost every industry, from healthcare to finance to manufacturing.
Yeah, and we've talked about those tech giants like Apple and Amazon, but it goes way beyond them. We're seeing innovations in AI, machine learning, blockchain, and I'm sure things we haven't even thought of yet.
Yeah, it's really mind-blowing when you stop and think about it. These technologies, they have the potential to disrupt whole industries, create entirely new markets, just like e-commerce revolutionized retail or streaming services changed entertainment.
It makes you wonder, what will the world even look like in 10, 20 years.
Hard to imagine, right? But I think one thing's for sure. Anyone who embraces these changes, those are the ones who are going to thrive.
And for investors, this means both big opportunities and some serious challenges. On the one hand, there's potential for huge growth in, well, in anything tech-related.
Right, but it can be tough to keep up with how fast everything's changing. Companies that don't adapt, they're going to get left behind.
It's disrupt or be disrupted.
Right.
And that applies not just to companies, but to people, too. We all need to be constantly learning and updating our skills so we can stay relevant in this, well, in this new world of work.
Yeah, it's like we're all running on this technological treadmill, just trying to keep up. But it's exciting too, right? Think about all the problems we can solve, all the possibilities.
Absolutely. But technology isn't the only thing shaping the future. There are other big trends, like how global economic power is shifting.
Right. For a long time, the U.S. has been the main economic force, but we're seeing other economies rising, especially in Asia. China, for instance, is becoming a major player.
And that shift has implications for everyone. I mean, we need to be thinking beyond traditional markets, looking at opportunities in these emerging markets.
And we need to be aware of the geopolitical risks that come with a world where power is more spread out. Competition between powerful countries, it can lead to tension, trade wars, even military conflict like we've seen in some parts of the world.
Yeah, those risks are real. They could disrupt those global supply chains, create instability in the markets, and a lot of uncertainty for investors and businesses. It's a lot to keep track of.
It is, but I think it's important to remember that even with all this uncertainty, there are also reasons to be optimistic. Human ingenuity, we're always finding new ways to solve problems and create value. Look at the breakthroughs in medicine, energy, sustainability.
And those breakthroughs aren't just making our lives better. They're creating new opportunities for investors who want to, well, to make a difference in the world.
It's a pretty amazing time to be alive, don't you think? To witness these incredible changes and be a part of shaping the future.
Absolutely. But it's also a time that requires us to pay attention, to think critically, and to be ready to adapt to whatever comes next.
I agree. And that's exactly what we've been trying to do in this deep dive, right? Provide some insights from this financial news podcast to help you make sense of everything and make good decisions.
We've covered a lot of ground today, but this is really just the beginning. Keep exploring these topics, ask questions, and challenge those assumptions.
Remember, the best investment you can make is in your own knowledge. So keep learning, keep growing, and keep diving deep into the world around you.
And on that note, we'll wrap up this deep dive. Thanks for joining us, and we'll see you next time.